You are listening to chartingwealth.com for Wednesday, the 27th of July, 2016. We jump right into what's going on in the total market. That is IYY, is an exchange-traded fund that tracks the entire stock market. For those of you joining us for the first time or have been gone for a little while, don't forget we always look at the 2-day chart first, then we look at the 4-hour or half-day chart, and we figure out what's going on in the marketplace. Well, the overall market, we see that we've breached our 2-day trend line. Actually, that's happened over the last 2 candles. We've had to redraw it each time as the market continues to slide sideways. It was technically up 0.12% for the day. Derivative oscillator has lost some of its energy, and the MACD also has. Again, the market has for the last many days, actually starting back sometime around the 15th, appeared to be topping out. It has continued to slowly wind itself higher and higher. And don't forget, it is the summertime. There's not a lot of volume in the market. We also have a presidential election year upon us, and we typically see the markets go higher and higher. And people say, what's the reason? Don't know that there's a reason. I mean, terrorist events used to lower the markets. Having actually a productive economy used to lower the market, used to increase the market. Now, what seems to increase the market is more free money. Do not forget that on Wednesday, there is going to be a Federal Open Market Committee meeting. So there is going to be discussion on the table about the interest rate, so pay attention to that. As we talked about in our weekly review and forecast, that can definitely have an impact on the market. So what do we see going on the half-day chart? Let's check that out. On the 4-hour chart, again, it looks like the market is just moving sideways, particularly when we zoom in. Had a lot of buildup back in the afternoon of the 22nd of July, and then the market really went down on the 25th and then ticked up a little bit, but nowhere near as high as it had been on the afternoon of the 22nd or back on the afternoon of the 20th of July. So again, still barely above the 2-day trend line. Haven't had the market flip back over on the 4-hour chart and move up as far as our derivative oscillator and our MACD goes. So continue to be wary of where this market is and whether or not it's going to go up. And you can also see, particularly on the 4-hour chart, how the Bollinger Bands have gotten closer and closer together as, of course, the volatility has decreased as the market's been slipping sideways for quite a while now, since about the 13th or 14th rather of July. So pay attention. Let's continue to watch, see what the Fed says tomorrow. Now, that could send the markets to new highs. It could also show that it's topped out and send it down. Remember, we pay attention to what the charts tell us, not what we think or want to happen. Wishful thinking, magical thinking does not work in the stock market. Now let's go next to SPY. That's the Standard & Poor's 500. 500 big companies, represents a lot of movement in the market, up 0.05%. We actually have a weak candle being drawn, lots of indecision, a spinning top, a red open box spinning top. Derivative oscillators losing its energy, and we see the MACD and the signal line also losing energy. Is this portending the market going down after the Federal Reserve meets? I don't know. I mean, it sort of looks that way, but one never knows until that meeting takes place. Now, if you want to gamble, you can gamble. We're not gamblers. We want to be intelligent investors and traders and make smart decisions. We want to practice virtually first, which is what we're all about, educating you on learning to read charts. We are not investment advisors, never have been, will not be here at Charting Wealth. Okay, now let's look at the 4-hour chart on the S&P 500. What does it show us? Well, it shows us lots of indecision, sideways slipping here for many days now. Still in a negative, actually. We're seeing the MACD and the signal line continue to move down. derivative oscillator is still in the negative, and it actually went further negative. So we're not seeing that pullback turn into an up move. In fact, it's becoming more and more of a down move instead of just a pullback. All right, we're going to now go back to our 2-day chart, and we're going to take a look at the Qs. What is the Qs? Well, that's the NASDAQ 100. It's been the most up moving of all of our charts. Still looks that way, up 0.11% for the day. However, derivative oscillator lost a little bit of energy. MACD and the signal line still look good. Our 2-day trend line still looks positive. If we look at the 4-hour chart, do we see anything different? Again, a lot of sideways tracking since about the 20th or so. Not as long a sideways track as the total market and the S&P 500, but we do see sideways slippage for the last few days. And we haven't seen that pullback turn into an up move. Could happen. Be ready for it if it does with the Fed meeting, and be ready to do yourself a virtual trade, a virtual buy on an up move on the Qs or the S&P 500 if indeed you see the pullback turn over into a crossover going up on that short chart. Be ready to jump into your virtual trade. Okay. Now let's go back to our 2-day chart, and lastly we will check out gold that was up for the day, 0.42%. We're starting to see a green candle being drawn. It's really more of a spinning top at this point. We've got, well, no we don't. We don't have, doesn't look like any up movement, hard to tell, but no, not really a spinning top, just a green candle with a bottom wick, which again doesn't mean strong up movement with a bottom wick like that. We do see a crossover going down on the 25th, of course. We've seen the derivative oscillator continue to heat up with its downward momentum, and we see the MACD and the signal line continue to move down and diverge. That is, move farther apart, which means more of a down move, even though it was up for the day. Gold was 0.42%. Remember, it's not just about price movement, it's about what the moving average convergence divergence tells us, and also what the MACD tells us. Well, I'm sorry, and the derivative oscillator. So what do we see going on the shorter chart on gold? The 4-hour chart looks like gold is trying to bottom. Looks like it's trying to bottom since about the 20th. It has really not gone below $125.64. It's slipping sideways. The derivative oscillators lost a little bit of energy. Again, if the markets soar tomorrow, gold may keep going down. If the markets get crushed with some bad news from the Fed, then you'll probably see gold crossover going up and soar. We'll just have to wait and see. Be ready to act. Be ready to be wise in your virtual trade that may be upon you on Wednesday. And again, if you haven't listened to our weekly review and forecast, that's available at its own podcast. You can also listen to the audio of it on our regular iTunes podcast, that is Charting Wealth. You can also follow it on Facebook, Twitter, Instagram, YouTube. So we just appreciate you being with us. Do pay attention to how the Fed meeting tomorrow affects things. Realize that that's probably the biggest determiner on how our market's going to move. As scary as it is, what the central bankers are up to, not what the economy's up to in production and all the other things you think would make the market soar. The more money we print, the more inflationary aspect it has, the more fiat currency you put out there, and you compare that to the value of real things like the stock market, well, the stock market may just continue to rise as we inflate the currency. Things do end up mattering in the end. So continue to watch, learn these charts so that when the worst thing happens, you're able to see it coming. You're able to protect yourself and your family when you get good enough to be able to read this and make your own decisions. This is what it's all about, my friends. Pay attention. You want to help us out? Thank you for everybody who has subscribed to the YouTube channel. Make sure to do that. We're getting closer and closer every day to 1,000 subscribers. I know thousands listen every week, but 1,000 hardcore subscribers will give us the ability to have a proprietary broadcast on YouTube, and that'll be for our subscribers. So please go there and subscribe. Also, subscribe to the iTunes podcast. Helps us so much. You guys have made us, I think we've been as high as 6 overall in the world for stock market podcasts. So thank you. Please continue to go there and subscribe and give us a good 5-star rating. Follow us on Facebook, Twitter, Instagram, YouTube, as I said, and subscribe to that podcast at iTunes. Thank you so much. Hope that you have a great day. Pay attention to the Fed's impact on the market tomorrow. Pay attention and learn. God bless you. Take care from chartingwealth.com.